Hey, this is Tom, and in this video, we're going to be looking at the Tesla Q3 financials. And I gotta be honest with you, I expected a lot, and I feel I got it and some.
My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me, I don't take bullshit from anybody.
Now, in my videos, as you know, the bottom line comes first because I respect your time. And if that's the only thing you need, I'm going to start with a 2-minute recap of the main highlights. Now, after we get done with that, we can move on to the actual analysis, but you don't have to stay for that. If the only thing you need is just the highlights, you can stay for the next 2 minutes and you can leave. I honestly don't feel bad about it. It's all Gucci. Don't worry about it. Before we start, as always, don't click nothing, don't smash nothing, don't buy nothing. I honestly don't care. Some people think it's a trick, it's a shtick. I honestly don't care. I just want you to listen because I want to teach you shit. So I don't care about clicking some buttons or buying some courses. Just check it out. So let's start with the highlights first. So Q3 Tesla. Now I just circled this number, 280 million. 280 million is the lowest regulatory credits we had in 2 years. As the haters predicted, the regulatory credits are coming down. But unlike their predictions, if you can call them predictions, as you can see here, the gross margin, it's not General Motors, the gross margin is at 30.5% this quarter. It's an all-time high. So the gross margin is above 30% all-time high, and if you remove regulatory credits, the gross margin is still 29%, which is an all-time high. Not only X credits, but even if you take this 28.8% X credit, meaning without credits, gross margin, is the all-time high, including credits, forever. This is pretty much insane. So even if you remove the credits, the remaining gross margin is still the highest in Tesla's history. So the debate about Tesla actually losing regulatory credits was correct. However, the result was not. As you can see, it's doing better than ever. But wait, we have more. So I prepared some more information for you. So revenues are at 13.8 billion, all-time high. Now, 57% year-over-year growth, 15% quarter-over-quarter growth. And in this section, we basically see that the whole busted growth story is basically nonsense, gobbledygook bullshit. I mean, almost 14 billion in the revenues, massive growth, almost 60% year over year, and 15% quarter over quarter, which is in line with the latest quarters. Basically, this proves us that this company has so much potential, we honestly don't know where it's going to go because we're talking about a crisis year. Chip shortages, anybody? Not to mention all the stuff that Tesla went through this year, inflation, China issues, everything. Still, these guys have grown by this much. Now, this basically proves that Gordon Johnson is a busted Johnson story. Not really Tesla being a busted growth story, but then again, I mean, I never believed this guy to begin with, but hey, it is what it is. Looking at just the EBITDA, and see this number here, 3.2 billion, 23.3% margin, all-time high. 77% year-over-year growth. Now, you really can't have that kind of growth. We just saw the general manager. I'm just kidding. The gross margin. We just saw the numbers. We're seeing the EBITDA. EBITDA grown 77%. So it means the company is becoming more efficient. It's ramping up. It's becoming more efficient. The whole story about them losing ground, basically losing money, is just nonsense. As you can see, they're making plenty of money. Now, you're going to see some impressive stuff here in a second. So this is the operating margin. Now, the operating margin, for those of you who are not familiar with this is basically the no-nonsense number. Now, a gross margin just tells us how efficient the production is. Operating margin is basically tells us how efficient the company is because it doesn't include all the nonsense gobbledygook that happens in the counting later, post below the line, below the operating margin. This is basically how much money the company is making from selling cars. As simple as that. So 14.6% margin. 14.6, all-time high. I know you're getting tired of hearing this, but every single category we have an all-time high this quarter. 11% less quarter. So Tesla increased by 3.6% its operating margin in a single quarter while struggling with supply chain issues, sharp, basically a crisis of chips, right? Anybody still remembers that? And all the issues in China, everybody remembers that? Still increased. So somehow they became more profitable, more efficient in the time of crisis, which is kind of unthinkable as far as what's going to happen next when we actually move out of this crisis and move into happy times. So earnings per share, of course, they beat Wall Street expectations. And here I just want to highlight something really interesting. So they beat like they always do. Here's the most interesting part though. So the expectations were 1.69, they had 186. The most interesting part here is that these numbers are already skewed. So when you look at these, you have to understand that the Wall Street expectations are already skewed upwards because of the level of expectations Tesla generates. So the 1.69 was already very high, and they still beat that. So it's kind of a double whammy, if you want. Now, as far as cash, and this is really interesting. So some may critique this because they lost 200 million in cash. So some may say, well, Tom, they just lost from 16.2 to 16 billion, in cash. That's really bad. Not really, Mother Lover, because they're building a bunch of factories and they're ramping up production, and we're in a supply chain issues here, chip shortage, remember? So all that's happening, the company is ramping up, and they only lost 200 million in cash, still sitting on 16 billion in cash. So I honestly can't see how this would be a bad thing. This is really interesting. Supercharging network, they're now at 3,200 stations, which is a 50% year-over-year growth. Now, this is a really interesting piece of data because it just widens the lead that Tesla already has, quite simply. Because this is why I believe a lot of people actually buy Teslas. I know a lot of people think engineering, right? It's true, software, it's true. I think the supercharging network, where you eliminate fears of charging, it's a huge selling point, and the lead is just getting wider and wider. Imagine what will happen to the cash flow when they actually open it up to everybody else, and it's going to be insane. So we spoke about it. The growth of this is just basically creates a negative incentive for anybody else to try and build something like this. So they'll rent it from Tesla and blah, 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 all the bullshit we usually say. Moving on, this is the clownery section. Busted growth story. Thank you, Gordon Johnson. So I wanted to say, really honestly, thank Gordon, because what just happened here is that for the past year, he's been preaching against Tesla, keeping the prices low, because certain people have definitely listened to him, and all of us got cheaper stock. Thank you, Gordon, appreciate it. However, I think if you listen to Gordon Johnson this year, last year, and pretty much recently, you're pretty much screwed. So I would take it up with Gordon, I think. Now, let's move on to the actual factuals. Let's look at the financials themselves.
Now, I spoke earlier before about the automotive revenues, 12 billion. It's a huge increase, 13.5 all-time high. Even without regulatory credits, 28.8 all-time high. We spoke about this, but check this out. Look at operating expenses. I didn't speak about this earlier. So the operating expenses went up from 1.2 to 1.6 billion. 400 million increase in operating expenses with an increase of revenues of almost $5 billion. If you tell me right now that any company can give me 5 billion more in revenues with just 400 million more in operating expenses, that's a kick-ass company, which is exactly what they did. It proves to me they know what they're doing. This is probably one of the most important metrics nobody's talking about. Now look at their operating margin, 9.2, 5.4, 5.7, 11, 15%. Look at the trend line from these past few quarters, from 5, 11, 14.6. They're killing it. The operating margin is insane. Now, adjusted EBITDA is the same. 77% growth in adjusted EBITDA. 23.3%. 3.2 billion. Look, they made 1.8 billion last year. 3.2 billion in just 1 year. 77% increase. That is insane. Look at the Model 3 production. They went up from 128,000 right here, 128,000 in Q3 2020, all the way up to 228,000, 80% increase in a single year. Yeah, sure, there's a demand problem. I can feel it. The hell you're talking about? Look at this chart, which again will not get enough attention. This is Tesla's market share in Europe, China, and Canada. As you can see, it's going up. So the whole narrative about market share in China going down, Europe going down, look, the numbers don't lie. It's almost a straight line demand. Look at vehicle deliveries. Look, ignore the numbers. 80,000 to 240,000, 3x in just 2 years, give or take. Q2 2020, not even 2 years. Not even 2 years. Look, this is insane. Look at the trend line. Look at the free cash flow. Boom, last 3 quarters. Look at the adjusted EBITDA. Look at adjusted EBITDA in the past 3 quarters. Boom, everything is going up. How can you think this company is actually doing bad? What's wrong with these people? But look at the balance sheet, right? Total assets, 57.8, eliminate 2 billion of goodwill. So let's say 55 with the 29 total liabilities, almost 2x assets versus liabilities. And they started the year with 8 billion of debt. Right now, they're at 2 billion of debt. They repaid 6 out of 8 billion of debt through this entire time. This is exactly what you do in inflationary times. You reduce your debt because cost of capital becomes expensive. Smart. By the way, look at this. Nobody's talking about this. Model Y production in Berlin and Austin. This hasn't even kicked in yet. Imagine the potential here.